You are welcome to today's webinar. Wow. Okay. Thank you so much for joining us this evening. And just like you have seen in the flyer, today's topic, the Nigerian stock, how to pick the next 10x stock. That's what we'll be looking at. So permit me, let me share my screen before I invite my co-hosts this evening. Let me share my screen, please. Okay. Good evening, Mr. Shegun Oyede. Can you please tell us your name and where you are watching from? I'm trying to hide my screen. Okay. That's a stage. Yes, we are good to go. Okay, so let's jump into it. The Nigerian stock market and how to pick the next 10x stock. How to pick the next 10x stock. So when we talk about picking the next 10x stock, okay, Mr. Shegun Oyede watching from Lagos, Mr. Gabriel from Ibadan. Okay, can we have more, please? Where are you watching us from? What's your name and where are you watching us from? Are you a trader or an investor, or you are both? Or you are a dividend investor, you invest in dividend paying stocks? Which one are you? Mr. Abubakar Idris from Sokoto, thank you. Okay, so Mr. Abundance Way from Imo State. So just let's go straight into it. We don't want to waste our time. We have a long way to go because we are still going to talk about, types of stocks. We are going to talk about how to pick the next 10x stocks. What are the things to look out for? Just like I said, I have a co-host in the house. Coach Benita is going to join me. So let's jump straight right into it. So when we talk about this 10x stock, we are not talking about, I'm sorry. I need to also be watching from here so as to track my network. Okay. When we talk about picking the next 10x stock, we are not talking about picking a 10x stock that is going to move from level 1 to 10x in 1 year. Fine, that happens, but it seldom happens. It happens occasionally. We are not talking about occasional happenings. We are not talking about something that's maybe due to happenstance, something that we can't really predict. And when we talk about predicting or speculating in the Nigerian stock market, fine, no one can get it 100%, but at least to an extent, I haven't checked, done common sense analysis, I haven't looked at the sentimental analysis, I haven't looked at the fundamental analysis. You can predict to an extent how a particular stock is going to perform in the next 5 to 10 years. In the next 5 to 10 years. Okay, please, I would want to, Mr. Egugu Ernest, when you say you want us to hit the nail on the head, what do you mean by that? Because you don't expect us to, I think I even need to issue a caveat. What we are saying is not a financial advice. If we tell you, because one of the things you need to understand about webinars is that there's something called forward-looking statements. Forward-looking statements, it means nobody can predict what will happen in the future. And nobody wants to put his or her name or his or her integrity on the line to say, I'm so sure, go and buy this stock. And eventually, what if something happens to that stock and that stock begins to dwindle? You can sue that person if you know your rights, because that person gave you a financial advice. So when you see that we don't come out to say, buy this, and we are also issuing a caveat that please do your own due diligence. We are saving ourselves from what we call liability. I'm a chartered accountant. I know what I'm talking about. So if you are looking for such, please, you can go elsewhere, Mr. Ernest. I'm sorry, I need to issue that caveat. I'm a professional in what I do. Business involves risk. Stock markets involve risk. So we cannot come out and say, go, we are sure of this very company, go and buy it. What if there is a mismanagement in that business? Maybe due to a macroeconomic event and the business begins to nose. You can sue us because we made a direct statement. So when you say we are not direct, it is not as if we cannot, and that's why we usually come to enlighten people. We are always looking for people to do it for us. Our own is to teach us what are the things to look out for, but expecting us to be saying, go and buy this, go and buy that, when we don't know your risk appetite, we don't know your risk tolerance, we don't know your investment objective, we don't know your age. So many things to be factored in before we can make direct statements. So please, if you are looking for 5 penny stocks to buy, 10 penny stocks, I want to tell you that if anybody comes online and tells you that without issuing a caveat, if anything goes wrong, you have the right to sue them because they have given you a financial advice and that financial advice eventually misled you to make a wrong decision. You can sue them for damages. So for those who come online to do those things, they don't know what they are doing. They are unprofessional. Any professional, go and watch those in other clients in US, in UK. When they are doing such, when they are having such webinars, they usually issue statements like it's a forward-looking statement. Nobody can predict the future 100%. Nobody. So if anybody is telling you, even if they have insider information, there's still to an extent that they can predict what will happen. If you are looking for all those ones, I think the best thing is for you. I think I don't even have to be addressing this, but I think maybe this is not for you. I guess this is not for you. Sincerely. Thank you so much. So you can exit. Thank you so much. We really appreciate you. I'm sure you did not pay us to be here. So thank you so much, Mr. Ernest Igugu. Okay, so let's move on. So when we talk about 10x stock, we are not talking about stocks that can do that in the next 12 months, in the next 6 months. While we have stocks that can do that, but nobody can predict that it will do that. Just like what happened to the insurance sector this year, just 2 months ago, just because a new bill was signed and we saw what happened with them. Nobody expected it. Fine, some people expected, maybe they were expecting the president to sign the bill, and eventually when he signed, the markets sentiments took over and we saw what happened to the insurance stocks. But we can see that all those things that are I'm sorry. Okay, so, and we can... Okay, Mr. Azubike, maybe you help him to explain. I think we have a group where people also ask questions, and how do I put it now? And we tell them we answer their questions. But just like I said, there's a limit to what we can say publicly. Just like I said that if anybody is coming out to say anything, I'm a chartered accountant. I have a license at stake. I know what it cost me before I became a chartered accountant. I cannot come out and be saying things that I know that is going to affect my image in the public, or that can make the Institute of Chartered Accountants to say, no, Oga, they said you misled the public with their information. So we can only come out with facts, historical facts. But we have seen it over time that even when we talk about historical performance, that does not mean that we can rightly predict or speculate what will happen in the future. So that is what I just believe. If you come on here on YouTube, you see some people, you have to pay 450,000, 200,000 before you can be on their paid group. Before you can be on their paid group. We have many of them on YouTube. But we are doing this, we are saying, okay, let us learn together. These are the things we look at before we pick a particular stocks. These are the factors we look at before we pick a particular stock. I think I even made a video when I was to pick VFD. These are what I do before I pick a particular stock. And I said, I'm buying this stock for a short term. Now, after I made that video, see what happened. What's it called? A market bulletin came from VFD that they are doing rights issue. And what happens when they are doing rights issue? Market sentiment comes in. And what happened? The buying zone, if some of us have watched that video, where I say that is the buying zone. From there, I want to believe it's going up. The moment they said they were having rights issue, that stock began to nosedive. Okay, sir. Thank you, sir. That stock began to nosedive. But thank God that in that video, I made a caveat that this is me. I am just making a video on how I pick stocks personally. And that anybody that wants to buy VFD should do their own due diligence. I never knew that VFD was going to come up with a rights issue. I never knew they were going to come up with the right. Just imagine if I did not issue that caveat that people should do their own due diligence. But these are the factors I look at before buying a particular stock. I spoke about so many things in that video. A week after making that video, VFD came up with a rights issue, and that scattered all my analysis. Fine, it did not really scatter it, but I meant it affected it on a short run because that was not my expectation. So nobody, if we have people who trade cryptocurrency, who trades forex, you will understand what I'm trying to talk about. You will understand what I'm trying to talk about. So please, we cannot say this and that. We cannot come out and just be talking about. We can only give facts about the economy, about the fundamentals, but we cannot. For instance, if I should mention a particular stock that we should go and buy a particular stock now, we have a different set of people as our viewers. We have low risk taker, we have medium risk taker, we have high risk taker. So the question is the stock for high risk takers? Is it for low risk takers? We don't know. You don't know. And a low risk taker, a newbie in the stock market, will just pick the stock and we go and buy. So please just try and understand us. We cannot do anything that eventually will now be detrimental to our own name. Thank you so much. So let's move on. Just like so when we are talking about 10x stock, we are talking about stocks that could eventually 10x in the next 5 to 10 years. In the next 5 to 10 years. And for instance, we have seen Honeywell. For instance, Honeywell in the past. Thank you, Mrs. Titi Ayeni. If anyone is not okay with analysis or pattern, they should stop listening to you. Please, we want to listen to you, sir. Thank you so much, ma. Thank you so much. Thank you so much, Mr. Zubike. Thank you so much. We just need to be factual. Thank you so much. He was asking for a concise video to save data and time. We have videos on our platforms. The person can go and watch. Mr. NS could go and watch, please. Okay, so let's go ahead, and we have free resources even on our website. So please, let's go ahead so that we will not. Okay, thank you so much. Let's go ahead. So Honeywell, as at January 2021, which was 5 years ago, was selling for 1 naira 30 kobo. Honeywell flour. As at today, Honeywell flour is selling for 23 naira. That's 20x in 5 years, which means if you invested 1 million naira in Honeywell flour as at January 1st, 2021, your 1 million naira would have become 20 million naira now. It would have appreciated to over 20 million naira. As at January 1st, 2023, NASCON selling at 10 naira to 39 kobo, 10 naira. But as at today, is selling for 19 naira. I think it even got to over 100 naira. It just retraced. So those are the things we are talking about. That how do we pick stocks like this? And there's something we call common sense analysis, and that's where I'm going to invite Coach Benita to talk to us about common sense analysis. You don't even need to go into the fundamentals yet. I understand, Prof. Fundamentals at times you may need to be taught what to look out for, which I'm going to be. Common sense analysis. What are the basic things to look out for when you are picking a particular stock? Rather than looking for, and please let me start with this quote from Coach Benita that says, know the stocks in your portfolio and know why they are there. This gives you confidence. Know the stocks in your portfolio and know why they are there. This gives you confidence. For instance, you see somebody investing maybe let's say 5 million naira and he has over 45 stocks in his portfolio. The question is, how will he know? How will he track it? How will he track the fundamental of his stocks? And when it comes to stocks, to me, I prefer quality over quantity. It is better you have 10 solid stocks or 5 solid stocks that you are sure of than having an avalanche or a plethora of stocks and you don't and you can't even track them. You don't even know. Let's say, for instance, you have 500 units of this, you have 1,000 units of this, you have 400 units of this. To me, that's personal. Please, it's personal. It depends on your own strategy. It depends. It still depends on your own strategy. So for me, I believe in quality than quantity. So know the stocks in your portfolio and know why they are there. This gives you confidence. For instance, the retracement we are having currently in the Nigerian stock market, it won't disturb you because you know the kind of stocks you have picked. Let me cite an example. In this Honeywell I spoke about that as of January 2021, it was 1 naira 30 kobo. Around 2022, it witnessed a turbulence. 2023, it went to around 3 naira 30 kobo, which means it has done over 100%. Then it came down to around 2 naira in 2023. For instance, if you are in Honeywell flour at that point in time, you will not be disturbed because you know the reason why you picked the stock in the first place. And that's the reason why we are coming out to teach us what are the things to look out for, rather than just taking stock recommendation. For instance, I'm forced to make a course now where I had to say in that video, I had to give as in a particular site, like 2 sites to invest, as in where they will be checking stock recommendation every week that is being performed by analysts, where you have access to like 4 or 5 analysts where they give stock recommendations weekly. The reason why I'm being tired of giving stock recommendation, not because of anything. I want to know our risk appetite. I want to know our risk tolerance. I want to know our investment objective. Somebody who is investing at the age of 56 is different from somebody who is investing at the age of 27. Somebody who is investing at the age of 56 should be careful, should not be thinking of growth stocks, for instance. Even if you have growth stocks, it should be minimal. You should be thinking more of blue chip stocks, thinking more of dividend paying stocks rather than penny stocks or growth stocks at the age of 56, because such a person is close to retirement. But somebody who is still 26, 27, still at the age of 30, the person can still make mistakes, can still go with growth stocks. And it's different, entirely different from somebody who is investing for his children. If you're investing for your children, you can go for penny stocks, for instance. It's for your children. Let them grow with it. So, know the reason why you have these stocks in your portfolio. It gives you confidence. Let's move on, please. So let me quickly talk about types of stocks before I invite Coach Benita to start our own, where she'll be talking about what are the common sense analysis in order that we can carry out. Dividend stocks are stocks that distribute. So we want to talk about types of stocks so that you know the types of stocks you are buying. For instance, you want to buy a particular stock. Oh, which stock is it? Is it a dividend paying stock, or is it a growth stock, or is it a blue chip stock, or is it a penny stock? You will know. So let me quickly say it. We have like 14 stocks, but I want to mention like 6 in this video. So please, in this webinar, dividend stocks are stocks that distribute a portion of their profits to shareholders on a regular basis in the form of dividends. Dividends are also known as income stocks, and they are suitable for investors looking for regular income. So for instance, if you are looking for regular income, we have only 2 stocks in Nigeria, 2 companies that pay dividend 4 times in a year. By the time you go to US stocks now, you have a plethora of them that pays 4 times in a year. But when it comes to Nigeria, it's only NIDF and Seplat that pays 4 times in a year. NIDF is majorly for a dividend paying stocks. That's why you can see that it has not really appreciated over time. I think maybe when they were even to come into the market, they came at the rate at 100 naira. And currently, I think they are sitting around 113 or 115. It has not appreciated so much. But one thing about NIGF, for instance, is that they have been consistent in paying dividend. They pay quarterly. So, dividend paying stocks, it is not a growth stock. You don't buy NIDF, for instance, and you are expecting it to 10x. While it is possible that it can 10x, it is possible. Please note my word, mark my words. It is possible. But somebody that is buying NIDF should know that it is not majorly for growth, it is for dividend. Let's move on. Number 2 is growth stocks. These are stocks of companies whose sales and profitability are rising quickly. They are rising quickly. And the question is, what is it that drives their sales? What is it that drives their profitability? That is what we call common sense analysis. We have 2 types of analysis. We have the qualitative analysis and we have the quantitative analysis. When we talk about qualitative, that's where Coach Benita will be coming in. So a growth stock is any stock that is anticipated to grow at a rate significantly above the average growth for the markets. Such that happened this year, such stock that did that this year is what is Better Glass and TIP. They have proven this year that they are growth stocks because they have outgrown the market. They have outpaced the markets. And for some of us who saw TIP at an early stage, very early stage, we entered quickly. And I want to say that even though it has gone up and is now retracing, we are still not out of it because we know that it's still a good stock. We are yet to see the potential. So that is for growth stock. Let me move to value stocks. Value stocks are shares of companies that trade below their intrinsic value based on fundamentals like earnings or sales. They trade I wish I have the charts. I would have shown you how it means that they trade below. When we talk about being overvalued and undervalued, that's when you begin to look at the PE ratio and the PEG ratio. But we are already going, when you want to pick for value stocks, you need to begin to check their fundamentals. When we talk about fundamentals, we are talking about their financial health. But we are not going into that today. But how we can recognize these growth stocks when we do what we call common sense analysis. Please note these things that I said. These are stocks of companies whose sales and profitability are rising quickly. What is it that we make their sales and profitability to rise quickly? That is what we call common sense analysis. You don't need to check their fundamental before you know what will drive their sales or what is going to drive their profitability. You don't need to check their books first. You don't need to check their books first. Even someone who did not study anything accounting related, who did not study anything finance related, can say, what is it that can make the growth of the sales of this company to grow, that is making it to rise like this? So that's what we'll be talking about. So quickly, let me move on. Blue chip stocks. Blue chip stocks are stocks of companies with lower liabilities, reliable earnings, and a history of dividend payment. For instance, the likes of Dangote Cement. These are blue chip stocks. For instance, companies that has the highest payout ratio, talking about Bua Cement, talking about Dangote Cement. When they make profit, 100% out of 100% of their profits, they pay like over 90% out as dividend. So they are well-established companies. Then we have penny stocks. Penny stocks, generally for me, it is any company that is trading below 10 naira per share. They are prone to high volatility due to low liquidity and trading volumes. And we have a whole lot of them in the Nigerian stock market. Then the last one is defensive stocks. Defensive stocks are favored during difficult market conditions since they are mostly unaffected by economic circumstances. So please pay attention to two stocks when you are investing, when you are looking at growth stocks, stocks that can likely do 10x. Number one, growth stocks, sales profitability. Coach Benita is going to teach us that, how to carry out common sense analysis. What are the things to look out for? Then defensive stocks, they are not affected by downturn in the economy. For instance, when COVID happened, there are some industries that were not affected. Can you figure those companies, those stocks out? That when COVID happened, they were not affected. Can you please name some in the comment section? Okay, let me now come back to, I'm sorry. Can you please name some of those sectors or some of those companies that when COVID hit in 2020, these companies were not affected by COVID? Can you please enlighten us in the less? We are all learning. Okay, so at this point, can we just please, we are all learning, we are over 50. Thank you, Mr. Kennedy Boss, FMCG. Example, I understand, fast-moving consumer goods. Nestle Food, thank you, Mr. Shegun Oyede. MTN, whether you like it or not, you must call. Thank you, Mrs. Grace and Jerry. Cadbury, yes. So, okay, thank you so much. Bua Foods, Mr. Damola, thank you so much. Pastor John Damola. Banking sector, yes, banking sector. People must transfer, whether we must transact. Bua Foods, thank you. Okay, permit me at this point in time to welcome Coach Benita to give us telecoms too. Thank you. So, what are the things to look out for, factors to look out for when it comes to looking at stocks that are likely to 10x, that are much my worst likely? Just like I said, nobody can give you a guarantee, not even the greatest investor. Okay, over to you, ma'am.
All right, thank you very much. Good evening, everyone. And thank you for having me again this evening. All right, I'll also be monitoring things from my hand here, so you might find me looking sideways once in a while. All right, so to go straight to what I've been asked to talk about this evening, I've been asked to talk about the qualitative analysis, which are those things that are non-figures, those things that don't have to do with figures. Now we have two types of analysis. We have more than two, but tonight we are looking at two. We have the quantitative analysis and we have the qualitative analysis. And I will be speaking about the qualitative analysis in the stock market. And just like my co-host has said earlier, that when we are talking about qualitative analysis, it's just those common sense analysis, those things that as a layman, if you don't know anything about the stock market, if you don't know what to invest in, and you just want to sit down and think within yourself, which kind of stock, what type of stocks can I buy? What are those things you will think about that, okay, I think this type of company should do well. I think this kind of company should do well. Those things is just common sense. What do they do? Who are their leaders? Do we need these things on daily basis? Can we do without them? Are there things we can do without? Recently, somebody was asking me, he wanted to invest in stock, and I was like, okay, this is what, okay, because of these amounts, because of your risk, we did all the analysis, and I was like, okay, in that situation, go for this particular stock. And one of his friends said, oh no, this is what I want him to buy. And I was like, okay, so why do you want your friends to buy this? And she told me this is the reason. Now, when she said that, she's actually somebody that has no knowledge about the stock market. But when I asked her, so why did you mention this? She actually mentioned the cement company. And okay, so why did you mention it? She said, because everybody that wants to build a house, we need cement. So she just believes that because of that, cement is something that is an in-demand thing. People will need it. Anybody that wants to build, either is government or individual, everybody that intends to build needs cement. So she believes that a cement company should do well. Now, that is common sense analysis. Now, to explain the qualitative and the quantitative, I would like to go little into some of the things I discussed in my last webinar. In my last webinar, I was talking about the engine of, I was like trying to liken the engine of a car to the fundamental analysis. Now, a lot of people, when we talk about fundamental analysis, which is the quantitative analysis now, they wonder, okay, what is this fundamental analysis people are always talking about? Now, when I had that webinar, I was talking about fundamental analysis as the engine of a vehicle. I was trying to liken it up to the engine of a vehicle, that if the car has a good body, if it has AC, if it has good interior, good leather and everything, and the engine is not working, now that's a problem. While that thing looks good on the outside and the engine is not working perfectly, we'll have a problem. But at the same time, if the engine is working perfectly and you have a leather seat that is torn, and let's say the iron in the leather seat is already out, let's say your tapping glass is not working and suddenly rain started to fall and rain is falling on you inside the vehicle. Now, even though you have a good engine, at the same time, you don't have a good body, you don't have a good interior, you don't have AC while the heat is so much and it's so sunny, and the sun is so scorching. So those, which means that while we are thinking that it is good to have a good engine, it is good to have a good foundation. When we are trying to build, we want to look at the foundation, because every other thing you want to do has to do with, is going to come on the foundation. At the same time, even while you're building, you want good interiors, you want the ecstasy, you want everything perfect, everything neat, you want the tiles well done, not one eye on one side and another on one side. Now, why am I saying all of this? That when we are considering checking our stocks, while we'll check the fundamental analysis, which has to do with the financial statement, that's the income statement, the cash flow, and the balance sheets. While we'll check all of that and check all the ratios, their revenue, their sales, their profit, checking their profit from one year to another, from one quarter to another, checking their P ratio. I know that all of these things I'm saying might look like it's big, but I know my co-host will help us do justice to the quantitative part. So while we are looking at all of these things, a good company that has good books, that have good records, if it has a bad leadership, in no time, we realize that that company will begin to dwindle. The company will begin to come down. Why? Just because if it has a bad leadership, in no time, it will reflect on the workers, it will reflect in the products, it will reflect in their books on the long run. So that's the reason why when we are checking the quantitative analysis, which is their books now, everything that has to do with the figures, we also want to check the qualitative analysis. That's every other thing that does not have to do with the figures. So now when we are considering this, what are those things that we need to look at? Now, I saw that when Mr. Korede was trying to, before you brought me in, it was already talking about some of those qualitative analyses already. And so I'm just going to add a little to that because it gave me a short time slot tonight. So I'm just going to add a little to that. Now, I'm going to start with leadership. I think I've talked about leadership already. So I'll just mention a little more on that. So now you want to check the leadership of the company. Who are the leaders of this company? Do they have a track record? What's the vision? Are they looking at amassing wealth for themselves, or they're considering their shareholders? Are they transparent in their records? Take a look at a company like GTCO. We can see that this company has grown from year to year, and we can see that the effect of the leadership has translated in their records, which means that they have both strong fundamentals, that's the quantitative, and they also have good leadership, that's qualitative now. So you want to look at the leadership. Who are the people behind? Because for every company, we have human beings behind it. And what they are selling is either product or service, fine. But we have people at the back end. So while you are looking at the products, who are the brain behind these products? Will the brain behind this product allow this product to thrive based on what you know about these people, based on the track record of these people? Now look at, if we look at Dangote now, if Dangote says, I'm starting so today, either you know anything about the product or you don't know, just because you add Dangote. One way or the other, you feel like, oh, okay, since it's Dangote, I can try. Now, Dangote refinery will soon be listed. I'm sure a lot of people are waiting. Not because of anything. It's because they believe that Dangote has a track record over the years. So who are the brain behind these products? Who are the brain behind these services? Now, when I'm saying product and services, that's the company now. Like, who are the brain behind this company? You want to check. That can help you to make a decision. Another one is it an inelastic product? Will people continue to need this product? The other time, Mr. Korede was asking people that, what are those products that during COVID, people still needed those products and all of those things. Now, there are products we need on day-to-day basis. There are products that we can't do without. Today, almost everybody, a larger population of people, of adults, have a phone, and we have a multimedia phone. Look at what internet has done to us. So many people will prefer that even if I don't have food to eat, they will tell you, I've had people say things like this, that even if there's no food, I must have data. So what does that tell you? They are saying that I know food is essential, but at the same time, I also need data. That's why you see companies coming with their adverts and they will tell you data is life, data is blood. Why? Because it has now become something that people can almost not do without. So when you're having a common sense analysis, the qualitative analysis, you are thinking, what is that thing? What is that product that people will continue to need? People cannot do without, excuse me, products and services that people will continue to need, that people cannot do without. So you also want to check what kind of product. Is it food product? Is it FMCG? Is it cement? Is it banking? You want to check. Is it data? Is it telecommunications? What are those things people cannot do without? So with that, that is also another way of checking, another common sense analysis. You are just thinking within yourself, what and what are those things that are very expedient, even if you don't want to check their books. If you say yes, then I move on. Okay, I think we are back now. I think we are back. Okay, please. Can we hear me? I don't know while this is rolling. Just need someone to confirm you can hear me and I move on so that I will not continue to talk. And Mr. Corey, please let me know if, oh, thank you very much, Mr. Adebowale. Okay, so let me move on. Another thing is their growth. As this company continues to grow from time to time. Now, you cannot check you cannot check quantitative analysis, leaving out
The line is cracking. Oh. Hello? Hello, Coach Benita. Wow. Yes. Hello, Coach Benita. Oh, I'm sorry we lost her. Okay, please, you can use the link to join again. Coach Benita, you can, let me chat. Okay, the guest link, please. Okay, wow. She was explaining qualitative analysis. Okay. Coach Benita. Okay, so can we have you? You can
Okay, I
continue,
think
ma. You
I'm
can
back
continue
now.
from where you stopped. Hello, Coach Benita. You can continue from where you stopped. They're talking about qualitative analysis. You are back. Wow, wow, wow. You are sorry for this. Please try and log in with the invites, with the guest invites. Maybe I should just continue so that we won't take. Okay, maybe let me continue with the quantitative analysis then. I'm sorry. Nigeria has happened again, Mr. Azubike. Well, and I guess it's on two networks. Okay, she's back. Coach Benita.
Okay, please, I'm deeply sorry. I
Please
apologize for
continue.
that.
Continue.
All right, I'm so sorry for that.
Glad to have you back.
Thank you very much. Okay, so like I think I stopped at the growth, and I said we cannot just look at the quantitative without at the same time while we can look at the qualitative without the quantitative. So now another thing you want to check, even with the common sense. Now somebody that is just thinking that okay, which stock can I buy? You also want to check the books of the company. You want to check the health of this company. You want to check how they have grown over the years. It's a common sense thing. It's something that you just think about. Ah, okay, so you said I should buy this. Or I want to buy this. I want to know how has this company performed in the past 5 years? Where does that lead you? Were they making profits? Did they make losses in 2 years? Lost profits in 2 years and another loss in 2 years? Which means, do you want to continue to gamble with a company that 2 years in for loss, 2 years in profits, 2 years in loss? That is just common sense. But if you see a company that over the past 5 years, they have been making consistent profits and increasingly making profits. Let's say this year, they made certain amounts. The following year, it increased by 30%. The following year, it increased by 50%. The third year by 70%. The fifth year by 100%. Now you can tell that this company is growing because it's not just growing in profits. You can see that the percentage increase in growth. So if you're investing in a company that has done from 20 to 40, from 40 to 70, from 70 to 100, it means that based on historical performance, you cannot believe. Now, sometimes you don't want to say that you can predict because you can't always, there are so many things to consider to predict. But you cannot tell that if this company have done this in the last 5 years, in the sixth year, you are not expecting anything less from them. So that is just common sense. How have they grown in the past few years, 5 years, 10 years? And when you're checking this, you want to check at least 5 years of growth. And the current year, that's the last 1 year, you want to check from their quarter to quarter growth. That's the first quarter to the second quarter to the third quarter and to the fourth quarter. Another thing you want to consider is, are there economic policies that is affecting or that can affect this particular stock? Now, look at what we have now. When the news came about the insurance sector, we can see that a lot of people are trying to position themselves already in the insurance sector. If this news did not come, we might not have that stock. That stock surged so high around August, I think. Yeah, I think that should be August. Now, this is just because a news came out, a policy came out that this is what we want to do in the insurance sector, and people are expecting so much going forward. Insurance sector is one sector that has suffered so much in the Nigerian sector. Is one sector that has suffered so much. That's insurance sector. A lot of insurance sector has suffered. I had some stocks that I bought far back as over 15 years, and it has almost returned nothing. In fact, at the point I was like, let me just forget about this stock. Those are some insurance stocks. While we have some that has done well, but look at what happened in the last few months. Look at what happened. Look at the policy that came out that they must restructure. Just because of that, we are expecting something to change in that particular sector. While it's not that, I know that some people trade these insurance stocks on the short term, they make quick gains and exits. But we are talking about what will make you good profits on the long run. We are talking about what will make you 5 times, 10 times what you have. And when you are looking at some of these stocks I'm talking about, there are stocks that they were either 1 naira or 2 naira in the past 10 years, 15, 18 years. And even up till now, it's still not yet a 10 naira stock. So the only reason why that stock can move is because because the government policy now, if it affects it, we can now begin to look in that area. Okay, because government policy is going to affect this, then we're expecting this sector to begin to do well. Now, moving forward, when you are now looking at this sector, does it mean that I can buy any insurance stock? That's another thing to ask. So before you now say, okay, let me go into insurance stock, then you now need that quantitative analysis, comparing one insurance stock to another insurance stock. Now, you can't compare an oil sector to an insurance sector. You can't compare an insurance sector to, let's say, if FMC food sector. You have to consider sector by sector analysis. When you now have a particular sector that you're looking at, now since we've been talking, I know most of us we can say that okay, we are looking at telecommunications, we are looking at food, because these are things that we will always need. But now, narrowing it down, when you now want to pick from this food sector, how do you know which of the stocks to pick in the food sector? How do you know which of the stocks to pick in the telecommunication sector? Maybe you want to pick cement. How do you know which one to pick in this sector? Now, that's where comparing each of these stock now matters. Where we now come back to the quantitative analysis, that's what Mr. Corey, my co-host, is going to help us with. So you now begin to compare. Okay, this is UACN. This is give me some of it. This is Cadbury. This is Nestle. This is Dangote Sugar. This is Nascon. You now want to compare, okay, between Nascon and Dansu, what do I buy? Between UACN and Boa Foods, what do I buy? Between Cadbury and Nestle, what do I buy? Then you now have to go back into quantitative analysis. So you can see that none of these can stand alone on its own. You don't want to check the body, just like I was using the analogy of a car. You don't want to check the body and it has a fine body, fine interior, everything perfect, looking good, new tires, and leave out the engine. At the same time, you don't want to check the engine and leave out the body because they are complementary. You don't want to leave one and you don't want to take one and leave the other. So now, how do you now compare one sector, not sector now, how do you now compare one stock to another stock in the same sector? So Mr. Crede is going to help us with that, because that's I don't want to take what he's supposed to take. Those are quantitative analysis now. Now, another thing is, in this seminar, we are considering stocks that can 10x, that can do 10 times the current amount. Say in the next 5 years, in the next 3 years, stocks that can do 10 times the amount. So now, when you want to pick a stock that can do 10 times the amount, you want to check what is the current price of that stock. If a stock is, let's say, 3,000 naira, I don't think there's no stock that I know now that is a 3,000 naira stock, but I know that we have a stock that is over 5,000 naira. Now, in one knowledge I want us to also understand, I know some people don't know this, while others might know, but that is why we are holding this, so that you can know when you want to take some of these decisions. For every stock to move from one price to another, now let me say it again, for every stock to move, the share price to move from one price to another price, take for example, if a stock is 10 naira, for that stock to move from 10 naira to 12 naira, one single individual must purchase up to 100,000 units of that stock. So when you see prices changing in the markets, it means that one person, one single trade, there's a single trade that's single trade, single transaction, one seller, one buyer now, one buyer in the market that is buying up to 100,000 units.
Please, can you hold on, man? Can you hold on?
Okay.
Can you hold on?
It's all right.
Okay, ma. Please, did you get that statement? That statement is very important. That's one of the reasons why we are here, to teach us the basics, of the Nigerian stock markets. We are still going to move to US markets, so many investments to talk about that we ourselves that we do. Do you understand? But we can see that many people don't understand these basics. So, did you understand that statement she just made now? That for one stock to move from one point to the other, a single individual needs to buy 100,000 units of it. For instance, Seplat. For the price of Seplat to change upwards, one individual needs to buy 100,000 units of it. So somebody may say, oh, I've bought Seplat, or you are looking for a growth stocks and you bought Seplat and you are expecting it to 10x. One single person needs to buy 100,000 units of Seplat for that price to change. What is 100,000 units of Seplat as at 5,000? That's over 500 million. I hope you got our point. I hope you get that. Please type yes. And if you have any question, you can ask that question. I've jotted down some questions. We are going to answer them. But we need to get this point so that you will not just be picking stocks. You will not just be picking stocks anyhow. Just like I said that, know the reason why you have a stock in your portfolio. Thank you, Mr. Chuku, Mr. Bonaya. Thank you, Mr. Imomo. Okay, can we get more yeses? Hope we got, okay, Mr. Dedako, thank you. Can we get, if we get like 5, then she can move on. Did we get that point? Yes, Madam Chidima. Okay, Mr. Jiboye, thank you. Okay, so you can move on, man.
Okay, so like I was saying, and I think you have explained that now. So let's say if a stock is 99 naira, for that stock to move from 99 naira to 100 naira, it means one person must purchase 100,000 units of that particular stock at 100 naira. So when you see your stock move downwards, moving from, let's say, 72 naira to 65 naira, it means somebody placed a trade on a 72 naira stock, but the person placed a trade at 65 naira for at least 100,000 units. So at the close of the day, if that trade is successful, and if it's the last trade, now it's the last trade that is the last trade, we can have a lot of people placing a trade for 100,000 units. Now, the last trade for that day, the stock market closes around 2:20 p.m. So the last trade before 2:20 p.m. that is on up to 100,000 units is what determines the price of that stock as at the close of that day. So the following day, when the market is opening, you find out that that same 65 naira that person purchased is now the new price. That is when you say, my stock has dropped in price, the share price has dropped. And if somebody purchased it above that 72 naira, which is the current market price at that day, if somebody purchased it now at 78 naira, the price will move from 72 naira to 78 naira because there was a single transaction of up to 100,000 units of that particular stock. Now, how does this concern you as an investor who wants to 10x current, who wants to 10x, who wants a stock that can 10x? You have to check for a stock that is already 5,000, over 5,000 naira. Like you were saying, it takes about 500 million if I calculate. Let's do that calculation. 100,000 units times 5,000. Let me see if I can do that here. Okay, so it talks about 500 million if I'm right, to move that stock from the current price to as little as, even if it's 10 naira. How much is it, please? I didn't calculate it. Do you want to help me with that calculation? Okay, somebody can help me with that calculation while I move. Over 500 million. Thank you very much. So you need over 500 million. Now, for anybody to place a single transaction of over 500 million, we say that an individual might not be able to do that. Maybe an institution. And if somebody is coming into the stock market to put their money in funds in stocks like Seplat, you know that they want capital preservation above growth. Their investment goal is different. For anybody to invest in Seplat, I believe that such person wants their capital preserved, not necessarily that they want that stock to grow. They are just putting that money there. They want it safe, nothing eating it up. And that's why each time people want to buy stocks, we always say, know why you are buying. Because the reason why you are buying determines what you will buy. I was saying in my last seminar that your stock should mirror who you are. Your stock should mirror what you want. Your stock should mirror what your goals are. So your stock should look like what you want from it. Your portfolio should look like what you want, what you desire. Maybe you want dividends. Maybe you're keen about dividends. Then your stock should reflect that. All those things in your portfolio should be majorly dividend stocks. If you want growth, let it reflect growth. So what you are buying should reflect what your investment goal is. I'll be rounding up with
Okay, are you with me?
Yes, sir.
Okay, someone asked that what if 10 people bought at 10,000 naira each?
Thank
Will
you
that change
very
the
much.
price?
Very good question. Now, if 10 people are buying 10,000 units each, it still doesn't change the price. There has to be in a single transaction of up to 100,000 units for that stock price to move. Now, if 10 people are now buying, let me just answer the other one. If 10 people now place an order for 100,000 units, you have 10 people, but all of them 100,000 units and above. The last person to buy before the closing hour of 2:20 p.m. determines the price in the market. So the last transaction that is 100,000 units and above determines the price of that particular stock the following day. Then the race continues. So that's why we keep having fluctuations, because people keep placing their orders at different prices. Please, I hope we got that. If you don't get it, please
So
just take this back.
so for instance, that's the reason. For instance, in the case of Seplat, in the case of, let's say, which other stock is above 1,000, let's say Presco, for instance, it's not as if people have not been trading them, but it's just because we've not seen a single person to buy a
100
single
units,
100,000 units. That is what it means. I hope they will get that. Okay. Am I right with that, ma?
Yes, you're very right. You're very correct. Thank you very much.
So then
let me.
does the purchase of 100,000 units apply to all stocks?
Yes, it applies to all stocks.
And that's what makes all penny stocks to be volatile.
Yeah, thank you.
Because, for instance, a stock of, let's say, 1 naira or 2 naira per share, with somebody just bringing in 200,000 naira, the stock price can change. Am I right? Hello, Coach Benita.
Yes, you're right. You're right, sir.
No, I'm just, you are the one who brought up that point, and I just want you to buttress it, as in to confirm that, you are more of a trader. You are more of a trader than me. I'm just an investor. I invest, I go, I check the fundamentals.
I actually invest more than I trade.
I understand too.
I'm actually an investor.
You manage portfolios, so
yeah, that's why I come in as a trader, but personally I'm an investor.
Okay, so let's move on. So I hope we've answered the question of that person. So that's why we see that it is when we are defining penny stocks the other time, we say it is highly volatile, because just imagine a stock of 1 naira or let's say 2 naira, and if you have noticed, the maximum the stock market can move in a day is, thank you, Mr. Adjuan, or Pierre, thank you. Africa, Nesu, all those ones are out. That's why you see that they've not been moving significantly. Why? Because it takes just it will take an individual who is buying 100,000 units to shift that price. Seplat too. I believe that. Now the question is it not possible for them to 10x? I am expecting some of these stocks to do what we call, is it a bonus issue or stock splits? Bonus issue or stock splits. That is when they invite retail investor. That is when they are looking for liquidity. One of the reasons why they do bonus issue or they do stock splits is to make sure that the stock is liquid, becomes liquid, especially to retail investors. The question is, how many retailers have 500 million to shift the price of, okay, you are welcome, sir, to shift the price of Seplat from that price? How many people have 500 million? Yes, and that's why you can see that they are mostly illiquid. Yes, you find, for instance, if you have, I remember when we bought Seplat at a point in time, to sell was an issue. People are having that issue with Geregu now. And aside from that, you also need to check the what we call free floats. Free floats. Free float means what is the percentage in the market, in the public. Some have less than 20%. Any stock that have less than 30% is a red flag for me. Maybe we'll talk about it in a separate video because I need to show you what free float is. But in that video where I spoke about, I made people realize where they can see free floats when they're analyzing stocks. Free floats. Okay, so you can move on, man.
Okay, so I'll actually soon be rounding off because of the time allotted to me. But now, for everyone that is on this session, this live session tonight, when we are talking about qualitative analysis, we are just saying those things, those little information that you have to know, those little knowledge that can add up to help you make a significant decision before you take the next step, before you go ahead and buy that stock, even if it has a solid fundamental. Now, I keep mentioning fundamental. When I'm saying fundamental, please just think of their books. Just think of their books, their records. So even if they have solid records, Seplat, does it mean they don't have solid records? No. Does it mean they don't have good expansion? It's both national and international. But at the same time, we can see that when you now look at the qualitative part, before you invest in Seplat, you have to know that, okay, I'm well invested in other type of stock. I just want this particular stock to protect my money, not necessarily because I'm looking for growth in this area. So now it can help you to know if you want to invest in this type of stock or you don't want to invest in that type of stock. So they are just common sense analysis, those things that you can think. Just think, a layman, that's something that is just layman. You don't have to be an accountant, you don't have to be anything, you just have to think about it, that okay, so what is this, so what is it, so what is that? Another example that I would like to give quickly is, if you look at the what we have recently now, we are beginning to have the issue of tax coming up. Now from next year, there's going to be a lot of tax reform in Nigeria. We are even hearing now that every individual must have a tax ID. What does that tell us? It means that as an investor, what do you want to ask yourself? Which company is responsible for taking up this tax? Which company is going to handle it? It means a lot of funds is going to be pumped into that particular company. Now, this is common sense analysis. Now, when you now know that, okay, this company will likely do well because this and this and this is going to, when I say this and this, I'm saying the issue of tax. Which company is going to be responsible for taking up all these taxes? Now, if they are responsible, lots of profits, lots of money coming in, but at the same time, now you want to check, now, do they have a good track record in their financials? Enough that they are going to be able to sustain these new profits they want to start making. Can you see that these are the ways you want to check before you buy into any type of stock? So I'm going to be stopping here and I'm going to allow my co-hosts to talk about the quantitative part of it. I've talked about the qualitative, things that when you think about it, when you discuss about it, when you look at what you need on day-to-day basis, they are qualitative. The financial aspect is the everything that has to do with that doesn't have to do with figures is the qualitative. So let me allow my co-host to talk about the quantitative.
Thank you so much, Ma. Thank you so much. Before I
You're
move into
very
the,
welcome.
thank you so much.
You're very welcome.
That's a wonderful presentation. Now, before I move into the quantitative analysis, I also want to buttress one thing I also look at is I look at the industry as a whole. When we talk about qualitative analysis, I look at the industry as a whole. Is it a growing industry or a dying industry?
Yeah.
Do you understand that? For instance, an industry in this day and time, maybe they are producing LCD television, or maybe they are producing transistor radio. That is a dying industry. But if we are talking about an industry, okay, I'm coming back to your question, Mr. Lincoln. I've jotted it down. I've written it down. I'm going to answer it. So if, for instance, an industry, say what is happening with AI, even though we don't really have them in the Nigerian stock market, what is driving charms, for instance, now is because of the digital aspect that they really want to take serious. They are having rights issue, and they stated what they want to use the money for. They want to expansion, and they want to have something like the digital bank, like the OPay and the Money Point. That is what you can see, that even though other stocks are declining, they are retracing, but you can see that charms has been a little bit stable in spite that 1.70 naira. That people are still demanding because they see that this is a growing industry. They are into IT and communication. So I also look at is it a growing industry or a dying industry? Please always look at that. Don't go and invest in a dying industry. Always look at it. Is it a growing industry? Then, just like she said, qualitative, what is it that is making them money? What is their revenue? What constitutes their revenue? How do they make their money? So that's it. And please, I need to say this at this point in time. Whenever we say that we have a course that we are selling, which is the course 1.0, NSSI course 1.0, course 2.0, we just believe that there are questions that people will be asking us that are already answered in those courses. They are already answered. For instance, I have somebody who was asking on our free group that, okay, we've been talking about fundamentals, that what is fundamentals? That is fundamental and app. Can you imagine such a question? Fine, to me, no question is a foolish question. I just believe that there are some things that one could save him or herself from. And we usually say that the best investment is investment in knowledge. Is investment in knowledge. Anything you want to invest in, first of all, invest in knowledge. I spoke about a guy who bought the course and eventually bought some, and he was asking me some questions. I said, okay, what is your strategy based on this course we have watched? At least we spoke about like 6 strategies, and he said, this is my strategy. Okay, based on your strategy, pick this stock, this stock, this stock, this stock. And eventually, when he picked those stocks, some months after, they were nosediving. And he came to my DM. He only asked, he said, should I DCA? Which means, should I dollar cost average? Should I buy the dip? And I said, go. And I said, their results will soon come, and just wait a bit. Let's see what their results will say. Now, all those stocks today, they are in profit. But because this guy understood the process, he has gone through the course. So when the stocks were going down, he knew what it was called volatility. So he was not perturbed. But a new beginner buying stocks today, seeing the stocks go down, should I sell? Should I hold? Should I? When somebody is asking, should I sell? Should I hold? Should I? Why did you buy the stock in the first place? When you know your strategy, you will not be perturbed. You will just be. You only need to add to your knowledge. That's it. So let's move on, please, to our quantitative analysis. So that's when we talk about buy this course. It's just for us to have the basic, the fundamental knowledge about, let's say, technical analysis, fundamental analysis. That's what we are trying to say, not for anything. So we want to look at quantitative analysis. Before I now come back to our question, when we talk about quantitative analysis, we are talking about looking at their financial statements. And we have 3 major things. Number 1 is the income statement. Number 2 is their statement of financial position, which we also call balance sheet. And number 3 is cash flow. Please, as an investor, even if it is just these 3, try and master it. And what are the things to look at in this? Every quarter, they usually post their financial statements every quarter. They are expected to post their quarterly reports. Now, when you are looking at the income statements, you want to check the revenue. The revenue is also the sales. Is it growing? If it is growing, has this growth been consistent? Let's say it's growing by 10%. Is this 10% consistent? Has it been consistent? Or today it is 10%, tomorrow is a loss, and year after is another upward turn? These are things you need to look at. So look at their revenue. That is the starting point. Number two, look at their gross margin. I don't want to bore us with all the cost of sales. Look at the cost of sales. Look at this. These are technical terms. But at least the basic that you need to know is number one, sales, their revenue. If their revenue is declining, it shows that maybe there is that something is wrong with the totality of the industry, or it is just this company. Number two, look at their profit margin, their gross margin. Number three, go and look at their net profit. We call it the bottom line. Go and look at their net profit. What is this saying? If you can check these three, have the knowledge of these three on fundamental analysis when it comes to income statements, is it growing? And how do you check for this? Let me use many tools, but I want to teach us. I just want to use one today. It is called Financial Times. You can use Financial Times. You can use NGX. You can use Africa Financials. You can use Trading View. You can use Market Screener. But let me use Financial Times in this for the purpose of this training. Permit me, I'm coming. Let me. So you can use Financial Times. So this is Financial Times. So this is Financial Times. Let me now go back there. I'm sorry. So once you get here, you want to come to the equity section. You want to come to the equity section. So once you come to the equity section, we have almost all the companies in almost all the states there. So you just come to Middle East Africa. So pick Nigeria in this case. Then you come down. If it is a particular sector or industry that you want to search for, so you just pick it as your criteria. But in this case, we are just looking for any industry that will meet this criteria of ours. So I'm not picking any particular sector. I'm not picking any particular industry. So then you come to equity attributes. So once you come to equity attributes, you will see it down here. You can see it's talking about default criteria. It's talking about stock metrics. It's talking about balance sheets, growth rates, valuation metrics. But for a new beginner that you have just heard about a stock, or maybe you love this stock and you think, okay, let me go and look at it. How has this stock been in the last 5 years? If a company has been making profits consistently for the next 5 years and it is in a growing industry, it is a pointer to you that stock will likely 10x in the next 5 to 10 years. Please mark my words, likely. There's probability. It is a forward-looking statement. I'm telling you how we make our own analysis. The company is selling in-demand products. It is a product that people are always in need of. People cannot do without it. It's an inelastic product. It is one of the essentials. We spoke the other time that we should talk about stocks that when COVID hit, they were still in demand. People were still demanding for them. They are defensive stocks. So once you see that they have had consistent growth for the past 5 years, because there's another, we have so many strategies. We have the ones too that they have been doing badly. Now they are being, maybe a new management takes over. We call that one microeconomic event. It's different from macroeconomic event. But the thing is, you cannot use every strategy. You only need to stick to your own strategy. So I just want to speak about some of the strategy you can use. So once you come here and you want to screen, you want to look at a company that has performed well in the last 5 years. Let's say their revenue, when it comes to their profit margin now, their gross margin. You also look at their net profit margin for the past 5 years. You can see this is it, gross margin for the year average, 5-year average. I want to look at it. I've picked that. I want to look at their net profit margin for the past 5 years. I want to see the average. So it's asking me from what to what. Saying to 20%. Sorry. Okay, first let's look at revenue, because I mentioned revenue. Let's look at revenue. Between 10 to 20%. 10 to 20%. Okay. So in this case now, equity attributes. Oh, wow, I'm sorry, this is giving me. I'm sorry, I'm getting something wrong here. I'm sorry. Okay, so it's giving me John Oates in this case, but I think I got something wrong in selecting my criteria. Okay. Okay. So Adjoan, yes, revenue, gross profits or gross margin. Then you look at net profits, income statements. I don't know, my network is slow. So once you are able to get that, yes, it should be based on individual preference. For instance, some people usually copy, when we are talking about US stocks, I usually copy Warren Buffett and Peter Lynch when it comes to US stock market. For Nigeria, I have my own. And it also depends on the industry, because you cannot compare IT with the margin in IT is different from manufacturing, is different from industrial. The margin for telecoms or for IT industry is totally different, because they usually have higher margin when it comes to their gross margin. I don't know what is wrong with my network. Let me see if TradingView will work. My network is It's bad. It's just rolling. Wow, 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 wow. All of them are just rolling. Okay, trading view comes up. Wow. Let me see. Okay. Financial Times is not opening. Okay. It returned me back to the beginning. Wow. Okay, maybe I should use that to answer why we are waiting for it to load. While we are waiting for it to load, let me quickly use that. Can they inflate revenue? Mr. Jiboy has this question. Can they inflate revenue or sales numbers just to give an impression of profitability? Absolutely yes. Absolutely yes. We have seen it over time. It is possible. However, that's one of the reasons why when I check financial statement, I usually their auditor. I'm also interested in the audit firm. Fine, they know that it is a sharp practice. However, if they are caught, they can be delisted. That will cause them to be delisted, and also people, shareholders can sue them. So they also are careful of this. But is it possible? It is possible. It is not only in Nigeria. It happens in other places. It is called doctoring in accounting. It is called doctoring. So it is possible. So, but many companies that I know that are on the NGX, they are being audited by the Big Four, and they are also careful, even though it is the responsibility of the management to dictate all this. So it is possible. Then another question. Somebody asks, how can I sell my stock? Is it done on the app? How can I sell my stock? Is it done on the app? Yes, if you bought it through an app, you can also sell it through your app. If you bought the stocks, I don't know why this is. Let me go back to Financial Times. Okay, so for this now, I'm back at Financial Times. Just like I said, the criteria is, I looked at their gross margin, that the ones that have done 20% and above, the profit margin 20% and above, then it's giving me FTN, Coco, Julius Berger. I'm sorry, I still got something wrong. I guess in the criteria I chose. Let me. Okay. Let's use the screener on TradingView. So once you come to TradingView, you go to the screener. Can the act of inflating data be called manipulation? Absolutely, yes. It is called manipulation. We call it window dressing or doctoring in accounting. Okay, so this is TradingView. Just like I said, it's either you can use Financial Times, you can use TradingView. you can use African Financials, you can use investing.com, you can use Market Screener. But most times, I use TradingView, because TradingView, I use it both for US stocks and Nigerian stocks. It's more comprehensive for me. For me, I use TradingView. And maybe I'm going to make a video on it on how all those criteria, so you can see first pick. I'm sorry, the network is so bad. First thing is to change the country. It's even yet to load. It's still on all stocks. I need to change it to Nigeria. Okay, so let me continue with the answering the question. Is yet to load? It's still loading. Because I need to first change from, you can see in US, for instance, we have over 7,900 companies in the US. In Nigeria, we have over 150, less than 200. Okay, please, can I sell my stocks on a app? Just sell it where you bought it. Then is qualitative and quantitative analysis also fundamental analysis? Fundamental analysis has to do with the financial health of the company. Fundamental analysis has to do with the financial health of the company. So that's what I spoke about, income statement. You look majorly as a beginner for three things. You look at their revenue. Is their revenue growing? Is their gross profit margin, is it growing? Then look at their net profit margin, is it growing? Go and check it for the past 5 years. Go and check it for the past 5 years, and that's what we are trying to do using. Okay, so this is all quick Nigeria. More markets. Let's wait for it. It's going to take okay, so let me just type in Nigeria. Apply. So, okay, so Nigeria is here. So just like I said, one thing I love about TradingView is it is more comprehensive than most of others, maybe except for investing.com. Investing.com too also is powerful. So let's say, for instance, we are looking for a company that's, let me look at what's, since I've not spoken about PE ratio, I won't want us to use PE ratio, because that's another criteria we can use. We want to look at revenue growth. So revenue growth, you can see above 25% and above. I want to see companies that have returned 25% and above. To bring it out then. I'm sorry, I don't know. I guess network is bad today. Financial Times is not the best in narrowing down. If you want to narrow down, go to choose TradingView. I know what I'm talking about. TradingView, when you want to narrow down, you can see the PE ratio. At times when you go to Financial Times, you won't even get to see the PEG ratio. You won't get to see the PE ratio. It will just be writing dash, 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 dash. So, but for me, I've compared the two, and that's why I've resolved. But it's still a personal preference. It's still a personal preference. And you can also check the balance sheets. TradingView is more robust for me, personally. It's more robust. So now I've spoken about, let's move on, because this is so that this will not delay us. So for income statement, that's what to check. At least for a beginner, check those three: revenue, income statement, revenue, gross margin, and profit margin. For cash flow, a major thing you need to look at is what we call free cash flow. Free cash flow, because if a company has an issue with free cash flow, it shows that they are just, maybe they are making profit, but they don't have cash. And that means they may be having liquidity issue. I'm not talking about liquidity issue in trading. I'm talking with internal matters, internal issue now, macroeconomic. So you need to look at their free cash flow. How do you get their free cash flow? Simple arithmetic that I use, simple formula is I look at their free cash flow, their cash flow from operating activities. Then I just deduct the capex, which is capital expenditure. That's how I know whether they have free cash flow or not. So look at their free cash flow. That's what you are looking at on their cash flow statements. Look at their free cash flow. And the last but not the least is you go to their balance sheet. What you need to go and look is majorly their debt to equity. Is it a company that is in debt? If their debt, we call it highly geared. If a company is in debt, serious debt that they don't have enough equity, enough asset to cater for it, to cover for it, it may be an issue. So a company may be making profits, but all those profits, instead of replying back to grow the company, they are doing what? They are using it to pay debts. So you can see that it is not so much, even when we talk about fundamental analysis, there are still more, when I say more. But we may look at their ROE, return on equity, but those ones, there's a formula to that. I don't want to disturb you with that. But even with this, for instance, there are even some companies that when you go on NGX, and please let me quickly go there now. If you want to go on NGX, how do you get their financial statements? How do you get their financial statements so that anytime you want to analyze, you can see it yourself? How do you get their financial statements? Just come to NGS. The website is NGS. Come to trade. Under trade, you come to list of companies. Under trade, you come to list of companies. Once you come to list of companies, let's wait for it to load. You come to list of companies. I'm sorry for the network. The network is, wow. Okay, so we are here now. So we come to list of companies. Let's wait for it to list. Okay, so once you come to list of companies, you now search for that company you are looking for. You search for the company you are looking for. There are so many companies, but in this case, let's say, for instance, we are looking for Nimitz. Nimitz is a pharmaceutical industry. It's in the pharmaceutical industry. So let's look for Nimitz. The moment you can see it, the moment you even type the first name, it will bring it out. So let's look at Nimitz. Trading View requires subscription. Even in trading, crypto, in trading Forex, I've never used the subscription mode. So you don't need subscription. You only need it for the advanced. For instance, you want to be comparing charts. You cannot use more than 3 charts at the same time. That's the limitation. The free version has limitations. That's just it. But for the basic analysis that you need, you can do your technical analysis, you can use the indicators, most of the indicators. The only limitation it has when it comes to indicators that you cannot use more than 3 indicators at a time, which means if you are using the volume indicator, you are using the MACD, you are using the RSI, you cannot use more than 3 at a time. So you can use the free version to do the analysis you want to do, whether you are trading the Nigerian stock market, you are the US stock market, Forex, whatever. You can use the free version. I can tell you that. Okay. So this is Nimitz. We are now at Nimitz. Now, when you come down, you can see it's talking about where they've been, their all-time high, the all-time low. Now you come down, then you come to this section. You can see profile, financial statements, corporate disclosure, director's dealings. These are the things you need to look at, please. Director dealings also has to do with picking your growth stocks. Director dealings also has to do with picking growth stocks. So you also check directors dealing. Is it a stock that the directors are buying? I'm sorry, my laptop, I need to plug it now. Is it a stock that the directors are buying? We call them the insiders. If it is not a stock they are buying, you have seen that they've not bought over time. What could be responsible for this? Because if it is a good stock, the directors, the management also should be buying into this company if they see potentials in this company. So please also check the directors dealing, check the corporate disclosure. That's where you'll be seeing insider dealings. Can we also search for indexes on NGX? Yes, you can search for indexes, but if you really want to check indexes, I will advise you I will still advise, depending on what you want to track with indexes, depending on what you want to track, but you can also use NGX, but depending on what you want to track, but you can use TradingView, you can also use Market Screener for that. It depends on what you want to track. Yes, directors dealings, check, are the directors buying? If I believe in a company and I'm in that company, I will definitely buy the shares. I will definitely. So check corporate disclosures as well. So this is the financial statement. For Nimet, you can see, let's come down, you can see the financial statements. Quarter 1, quarter 2, quarter 3, the yearly, what's it called? The one for the year. So let's open one, for instance. This is the last one that was released for quarter 2. You open it, it opens up in a PDF for you. Then you begin to check. Some companies would have done their percentage even side by side. I think in the case of Nimet, they have done their percentage by the side. But definitely not the 5-year, not the 3-year comparison. If you want to check the 3-year comparison, the 5-year comparison, I've mentioned some of the tools you can use. I think investing.com, TradingView, and the rest. So you come here, Nimet International. Let's wait for it a bit. Okay, so this is their last statement. So one thing you also need to understand that, and that's one of the issues we are still having in the Nigerian stock market, and we pray that they correct it, is that there's no, I'm sorry, is that there's no uniform pattern in which they present their financial statements. There's no uniform pattern. When I say uniform pattern, you see some presenting, comparing. There was one I saw, insurance company. I was like, this is a different pattern entirely. It's just because I'm a professional. That's why I was able to understand that financial statement. But there are some that are simple. In this case now, you can see it's simple enough. They've already even done their own percentage, year-on-year change. For instance, they said that from 2024 to 2025, when you look at their 6 months change, they said it grew by 76%. Their revenue, their gross profits grew by 69%. So by the time you come to operating profit, he said it grew by 115%. And by the time you come to profit on year, it grew by 11%. For someone like me, I may want to probe further. When I say probe further, gross margin is 69%. Why did their profits for the year now grew by 11%? Which means is either you can see a major thing for them, their finance costs, their administrative expenses. Which means out of the whole 69% that turned into gross margin, they were only able to convert 11%. There was only a 11% growth in profit margin, in net profit, which is the bottom line. So this could be a concern for me, and I'll begin to check what could be responsible. But for you, you may say 11%, at least they grew. It is in double digits. You are good to go. But you know, as an analyst, as a financial analyst, I still need to dig deeper. I'm not saying something is wrong with the financial statement. Don't get me wrong, because I've made some statements, and that's why I'm always careful with my statement at times. So that some people will not get it wrong. I made a video on charms, and somebody wrote in the comment section that you are okay. What you are trying to say is that charms is not a good buy. When even me myself, I know the amount of charms I'm holding. Why would I say such? But just because you don't make direct statements, some people just want you to make direct statements. You cannot be. There are some direct statements you cannot be making. So if you're expecting me to make direct statements, I cannot be making some direct statements. Even when I see something that is not so good, I cannot say it publicly, because I will be damaging I'll be damaging the image of that company. I'll be giving them a bad image. And maybe that situation is only temporary. Because at times we may need to look at their 3 years, we may look at their 5 years. So it may be temporary at times. And for instance, there's something we call notes to the accounts. They might have said something about it in the notes. And in making the analysis, I cannot go through their notes on this live, for instance. Why? Because this is how many pages now? It's a 49-page statement. 49 state financial statements. I cannot go through everything. I still need to go and read their notes. Know that, okay, this is what is happening to Nimit. Okay, this is the reason why their net profit margin is 11%, because I was expecting maybe something above 15% or something above 20%. So by the time I read their notes to the accounts, I can now have an understanding that, oh, this is the reason why it is 11%. And now I can make my decision on them. But I did not make a direct statement that, oh, no, what some people are is for you to say, condemn that 11%. I cannot condemn it because I'm yet to see the notes to the account. Okay, why is their finance cost? Why is it like this? Is it even decreasing or increasing? You look at their finance cost here now, for instance, it increased by 186%. What costs that? I need to check their notes to the accounts so that in order to have an informed decision. I hope you are getting my point. So I'm sorry if we don't make direct statements. We are only trying as much as possible to be professionals. Thank you so much. So let's move on. So look at their statement, then you go down. If you want to also check for free float, is the company liquid? For instance, in the case of Nimet, let me quickly see if I can see that very close here. Okay, this is what we call free floats. Their free flow statements. It is owned by insiders. 69% is owned by insiders. It's owned by substantial, when I say insiders, those that have substantial holdings. Substantial holdings out of the 100%. Like, let me say even 70%. Directors have 6.42%. The one that is applicable to the whole public is 23%. For me, 23% is still good. But you see some companies, it is 10%. 10% will be a struggle. I guess something is wrong. Okay, so I can continue. So this is their free float. So, wow, what's wrong? Please, can you hear me? Can I get that in the comment section? Can you hear me, please? Can you hear me? Can I see that chart in the comment section? Hello? Can somebody please type in the comment section? Can you hear me? Can I continue? Okay, I don't know whether Mr. or Mrs. Adewoye said, as a first-time investor, I shortlisted for blue chip assets, Zenith, yes, for growth, Orlando, Dangote Sugar, Custodian, Tip, Flour Mill, for penny stock, Charms, Kutix, Livestock, VFD Group, Transcorp, ICO. Okay, that's good. That's even good as a first-time investor, sincerely. The only stock that is not in my watch list here, that is personally not in my watch list out of all the stocks you listed here, is Custodian, then Transcorp, yes, Transcorp. Ohando is not in my watch list. Then Kutix is not also in my watch list. Not for anything. I know that Kutix is good, but it's not just on my watch list. You cannot own every stock. That's just the truth. Okay, somebody asked that. What is the... Please, can you hear me? I don't know. Coach Benita, please, can you hear me? Please, can we answer in the comment section? Oh, clearly, thank you. Okay, let's go ahead then. Okay, so you cannot own every stock. Please, you cannot own every stock. Oh, wow. Oh, thank you. Okay, you cannot own every stock. So it's better you know that. But just like I said that, no, Coach Benita, the quote at the beginning said, know the reason why you own a stock. Know the reason. This gives you confidence. This gives you confidence. So somebody asked in the comment section, if you have any question, you can now begin to ask, please. You can begin to ask your questions. Somebody asked, what is the right entry price for Champions Brewery? Champions Brewery is also not on my watch list. It's not on my watch list. You can see that when Mr. or Mrs. Adewoye now, when she listed all the stocks in her, I said, I know of Access, I know of Zenith, definitely good stocks. I know of Dangote Sugar. Dangote Sugar is even in a good buy region now. You can buy Dangote Sugar. Custodian for me is not on my watch list. You cannot own it. We have over 150 stocks in the Nigerian stock markets. I cannot know everything. And I can't be watching every stock market. I'm still in real estate. There are other things I do. I still talk about other investment. So I cannot know everything. Tip. Wonderful. Flour mill. Which of the flour mill is it? Northern Nigerian flour mill or Honeywell flour mill? Because we have two of them. Penny stocks, Chams, definitely. Livestock, good. VFD Group, good. ICO, good. But Kutis is not on my watch list. Transcorp, that is not on my watch list does not mean they are not good stocks, please. And when somebody was asking, can I replicate your what's it called, your portfolio? I said some of my stocks, they are already on the high side. For instance, see, we bought what's it called, Presco at a lower price. If you want to replicate it, you now want to go and buy Presco. Presco is currently at 1,480, and they still want to have right issue, which means they may likely come down. It may likely come down due to market sentiment. I don't know yet. It is until they release the modality of their right issue. That's when we know what is going to happen with Presco. That's why you can see that it has been stagnant for a while. They want to offer 250 billion as right issue to the existing shareholders. So market sentiment is going to set in place. So I said, if you now want to go and buy it at 1,480, you can't replicate that. You cannot replicate, let's say, which other stocks, some of the stocks in my portfolio, you can't replicate them at the current price. You need to do technical analysis. So if you have any question, please, you are free to ask now. Please, what are the charges on selling stocks? Can you please illustrate with an example? Okay, how blue chip stocks preserve capital? Does it also hedge against inflation? Coach Benita, can you please help us to answer that? What are the charges on selling stocks? So for instance, let me chip in. When we say people should use Atlas portfolio, it is not because maybe we have an affiliate with them, but that's what we use to trade, and they have one of the cheapest charges. One of the cheapest. You can confirm that. I think they charge 0.4 when you are buying, and when you are selling, they charge 0.6 for Atlas portfolio. When you are buying, they charge 0.4. Or Coach Benita can please correct me if I'm making a mistake here. And they charge 0.6 when you are selling. For some brokers, they charge 1.5%. You may say, oh, this percentage don't matter, but when you do large volume, you will understand what I mean. When you do large volume, you will know what I mean by percentage. So can you please, Ma, talk about that? And when we talk about blue chip stocks, does it preserve capital? And does it hedge against inflation?
Okay, thank you very much. Okay, so for the first question that the person asked, that can we explain with example? So just like it was saying that each stockbroker that you use, they have different charges, and that's why we usually say that before you choose your stockbroker, there are certain things you need to consider. But we're not talking about that tonight. I'm going to use just what the question you asked. So now, when you are choosing a stockbroker, one of the things you want to check is what are their charges like. We have different brokers with different charges. So if I say this is the charges, it means I'm talking about my own stockbroker. So what you want to do now is check the percentage of what your stockbroker charges. And now when they are charging, they are not charging on your profits. They are charging on the total amount. So let's say for instance, you are buying a stock and you're buying just a single stock and you're buying 5 million, worth 5 million naira. It means that if their charges is 1.5 buy, they have the buy charges and they have the sell charges. That means when you are buying, there's a certain percentage they charge when you're buying, and there's a certain percentage you they take when you're also selling. So their buy percentage, if it's 1.5, now their own is 1.5. Apart from their own, they're going to charge you SMS alert. They're going to charge you sec is going, something like sec alert is also going to be added. You're going to be charged VAT. All of those things they will now calculate together and they will charge you. So note that apart from that 1.5% or 1% or 0.4%, depending on your stockbroker, the total might now, in short, the total will now be more than 0.4 or 1.5 when all these little other charges are added to it. But your stockbroker charges will usually be stated. So if it's 1.5, you know, if it's 1%, you know, if it's 0.4%, you already know. The other charges you might not know are the little other charges, maybe SMS charges. I think that is 10 naira and it's fixed. Either you're buying 100,000 units or you're buying 1 unit, that price is fixed. So that's why we say that it's better to buy more quantity, stay in one stock, one quantity, one particular stock than spreading across. So the more you're buying, selling, oh sorry, the more you are buying and selling, little charges also eats into your profits one way or the other. So to answer your question, apart from when you know the broker you're using, when you know their charges, there are little other charges. But this charge you will see it for me, my stockbroker sends my charges to my mail after buying anything. After every buy purchase, you have a mail. It breaks down all the charges one after the other, showing me the aggregates and the real amounts. So you might want to check that for your own stockbroker. Okay, is
Okay.
that sorted?
Yes. What about the aspect of blue chip stocks? Preservation of capital, and also does it hedge against inflation?
Okay. So talking about blue chip stocks, yes, it preserves your capital. Now, when we say capital preservation, that doesn't mean that when you come into the market with, let's say this particular stock is 400 naira now, it doesn't mean that it cannot drop from 400 to 390. It doesn't mean it cannot drop from 400 to 360 because the market will not move in a straight direction. It's like a zigzag. So it doesn't mean that the price cannot drop, but at the same time, it doesn't also mean that the price cannot go up. So when we say preservation of capital, we are not looking at a short term. We are looking at from medium to long term. So on the long run, your capital is preserved. So looking at inflation, can it edge against inflation? Yes and no, because you can't tell exactly the price it will shoot up to. I don't know if you understand what I'm saying. You can't tell if it will do 20% or if it will do 30%. You can't tell the exact price. You can't tell the exact percentage that is going to change. So while it can actually preserve your capital, as touching that inflation, let's say currently inflation is about 23%. If I think the current inflation is about 23%. Now that's for 1 year. What you're asking now is that within that 1 year, will this stock shoot up more than 20%? While inflation is about 23%, on how that particular stock move within that year. But one thing about most of these stocks is that even if it doesn't move that year, if you look at it over the like 3, 4, 5, realize that it will have done what it will do in a, let's say it's doing 20% this year. The following year, you might realize that it might do 25%. The third year, it could do 30%. The fourth year, it could do 40%. So on the long run, when you look at the aggregate of what is giving you,
Hello, ma. We cannot hear you. We can't hear you, ma. Okay, I guess she will soon be back. So when we talk about, can you hear me as in the comment section while we wait for her to join us soon? Okay. Can you confirm, please? Can you please type in the comment section? Can you hear me? Can you hear me? While we draw this to a close, let me quickly okay, so you can hear me. Okay, so let's move on there. Thank you. So it can preserve your capital, but don't forget, every business, every economy, there is a risk. When we talk about blue chip stocks, can they hedge against inflation? Of course, yes. For instance, MTN is a blue chip stock. It has done over 100% this year. It has done over 100%. What is the inflation rate? Inflation rate is at what percent now? 21.88%. It has done almost five times the inflation rate. So blue chip stocks can hedge against inflation, and at the same time, you need to understand that there is business risk. It can go the downward side. Just like I said sometimes to some people in our group that when we're talking about the palm oil sector, I said the biggest palm oil, one of the biggest palm oil companies in the world is currently having financial issues. And the major reason being that is due to mismanagement. Nothing but mismanagement. So can you just imagine that? It's a blue chip stock, but currently they are having financial issues. They've made several business decisions that does not align with the goal of their vision, and eventually it's currently having serious financial issues. I think is in Malaysia. The company is in Malaysia. Malaysia is one of the leading companies in palm oil. So I hope you get my point. So now, Mr. Adiku, Mr. Christopher helped us to confirm. Yes, I remember that last webinar he was here and we spoke about Atlas portfolio. He was using bamboo then. And he can confirm. He said, I can confirm it is the cheapest. I spend so much on commission buying and selling on bamboo. Thank you so much, Mr. Christopher, for saying that. Mr. Chukwemeka, thank you too. Thank you. He said the charges are stated clearly in the contract notes. Yes, it is stated. Yes, it is stated there. Okay. Tony Temi says, can you please enlighten us on CHN and CSCS numbers, please? Because confusion is okay. For me, I think I have like 3 stockbrokers and I have one single CHN number, just a single CHN number. Your CHN number should be like your BVN, while your CSCS should be like your account number. You can have several accounts, but one CHN. So, but I've seen people talking about they have different CHN, and I can't, since it has not happened to me, I have just one CHN, and different CSCS. So your CSCS may differ, may be different, and it's expected to be different, but it should be just one CHN because your CHN is synonymous to your BVN. So I don't know what is happening officially. I don't know the account of those who have said they are experiencing those issues. I saw it on our group too, that people are complaining. Some people said they are having different CHN. Okay, Mr. Altai also said Bamboo is on the high side. Thank you, sir. One thing, Bamboo is a sub-broker. That's just the reason. They are not a directly licensed stockbroker with the Nigerian Stock Exchange. So they are more or less like an intermediary. They're still a direct, and you will be charged twice when you are investing with them. That's not to condemn them, please. Just like I said, we don't condemn anything. It's all about preference. It's all about preference. Some people use Bamboo because of the simple interface. And somebody asked, does Atlas have an app? They don't have an app yet. They don't have an app. You have to go through their websites. Okay, any other question? Okay, ICO or mutual benefits? Both are solid. Sincerely, both are solid. I've gone through their financial statement. Both are solid. I don't know whether Coach Benita has a preference, but both are solid. For mutual benefits and ICO, they are solid. I think I just checked NEM too last week. Their financial statement too is solid. Okay, if we don't have any other Trove, I don't know about Trove. If anybody knows about Trove, you can help us to answer in the comment section. I don't know about Trove, but Trove also is not a direct stock brokerage firm. It's not a direct. If you want to know any WAPCO is not in my watch list. It's not in my watch list. I don't have WAPCO in my watch list. Okay. Okay, for you to check okay, let me quickly say this before we end. In the next 2 weeks, we want to talk about macroeconomic events, because when we talk about growth stocks as well, we'll be looking at companies who will benefit from macroeconomic events. That is what has happened to NIRA. That is what has happened to the insurance company. It was NIRA 2025 Act that affected them, that made them to spike. And also, we know that the President Tinubu also signed four new tax laws, and which is going to take effect from January 1st, 2026. And that's why in our next webinar, we'll be talking about the new tax bill, what investors should know. So this is what we'll be talking about in our next webinar. And if you know that you need one-on-one session, you can book a one-on-one session with Coach Benita. That's what she usually. Okay, thank you so much. You can book a one-on-one session. Go through our website, cifacademy.com.ng. Maybe you want to build your portfolio. That's what she does. You want to rearrange your portfolio. That's what she does. She's a portfolio builder. AfriInvest is a licensed stockbroker. I would have quickly loved us to show us where we can see it on NGS. How to confirm, is your stockbroker a directly licensed stockbroker? Is on NGS. How you can check. If time permits, I can quickly go there now, so you can say anytime you want to invest with a stockbroker, go and check, is it directly licensed? When it is directly licensed, it means you will only be charged once. But when it is not directly licensed, it is a sub-broker, you will be charged twice. You need to understand this. So that's why some charges are high. They are high. Thank you so much, Missy. Maybe Temitope Adewoye. I don't know whether it's a Mr. Mrs. So we come here maybe every 2 weeks. Then you can also subscribe to Coach Benita YouTube channel. She, for instance, next week now, she will also be having a webinar on our YouTube channel. Fixed income investments. She'll be talking about fixed income investments in Nigeria. Don't just invest in stock market, also have fixed income in your portfolio. Please, you need a balanced portfolio. As you are having stocks and shares, currently stocks and shares are doing somehow. So please subscribe to our channel. Coach Benita is the name of the channel. Subscribe to it. And if you want one-on-one with her, go through our websites and book a one-on-one session with her, or chat me up. Chat our 080. Let me put it here. Chat it up that you want a one-on-one with Coach Benita. Okay, so that's it. Okay, finally, let me go to NGX website. What of Stanbic and Vertiva Banking. Those are ETFs, Nigerian ETFs. I think I'm releasing the video either on Wednesday or Friday this week. I've made a video on the ETFs, Nigerian ETFs. Yes, we have 12 of them. Stanbic IBTC 30, Vertiva Banking. Yes, they are ETFs, Nigerian ETFs. I've made a video on them. So I will release this whether Wednesday or Friday this week by God's grace. Okay, so you can watch out. So let me go to NGS website to show us where we can see whether your broker is licensed, and you can just go there. NGS website. So immediately after that, we just call it a day. We call it a day immediately after that. NGS website. So we are back on NGS websites. Let's wait for the network. List of brokers. I'm sorry, I'm looking for. You'll see lists of brokers. I'm sure I'm trying to look for it. Just look for list of brokers. The moment you click on list of brokers, I'm trying to look for it now. Find a broker. Is it find a broker? Okay, I guess find a broker. So on that trade, come to find a broker. On that trade, come to find a broker. So click on it. I guess it should be there. So the moment you click on it, then search for that broker. So if the name is not there, then know that that broker you are using or that app is a so you can see, even some are already inactive. Adama Securities Limited inactive. So just type here, search. For instance, in the case of, let me just type Meristem. You can see it has brought it out. Meristem is licensed. Let's check Chapel Hill Deham. Some that I can remember on my head. Chapel Hill Deham is licensed. Let's check another one, which is maybe United Capital. You can see United Capital. Is there anyone you remember me to check before we call it a day? Is there anyone? Okay, so I think that end we have come to Afri Invest. Okay, you want to be sure Afri Invest is licensed. Afri Invest. This is Afri Invest. Afri Invest is there. Afri Invest Securities. Meristem is okay. You want us to confirm Atlas. Atlas also. So just go to the Atlas. Atlas. You can see Atlas is there. So that's all. That's all. Thank you so much. Meristem is there. Meristem is licensed. Thank you so much. So, is there anything you have learned from today's webinar? If you have learned something, please can you type it in the comment section? If there's something you have learned, can you just type it in the comment section? One thing you have learned before we call it a day. One thing you have learned. Meristem charges 1.3. Wow, that's serious. Wow. What have you learned? Please type in the comment section. Until we meet you, just like I said, 2 weeks' time, we'll be meeting again, God willing. Fundamental analysis. Thank you. Ferio Q, thank you. What have you learned? Oh, that's wonderful. Temitope Adewoye. I learned that it takes 100,000 units investment by an individual to move share price. Titi Ayeni, thank you. Common sense analysis, very important. Common sense analysis. Let us have two more before we call it a day. And if you are yet to join the free WhatsApp group, you can chat us up on this number. Yes, thank you, Madam Julian. Doing your own research diligently is paramount. Thank you so much. So on this note, we call it a day. Thank you so much for joining us. We are so much. Thank you for your patience. Thank you for all you have done. Thank you so much, Mr. Jonathan. Thank you. So check our website, cifacademy.com.ng. There are free resources, and we are promising to make more courses available on the sites. Invest in knowledge before you invest in any asset or any instrument. So we meet in the next 2 weeks. Stay blessed. Thank you.